the Reserve Bank of India had established. This Royal Commission is also known as Hilton Young Commission. FEMA Act was passed in 1973 and this FEMA Act came to existence in 1999. This Reserve Bank of India is also going to offer the industrial finance for the industrialist for the development of micro and macro industries. Reserve Bank of India is the only authorized body to issue the currency notes. Hello everybody, a warm welcome to one and all. I am Mr. Hemant Kumar from the Department of Commerce and Management, Vidhyaashram First Aid College, MYSURU, the Temple of Excellence. In today's session, we are going with the subject Banking Law and Practice, Session 3 of Unit 4. It's about Reserve Bank of India for first semester BCom students. This is agenda of today's session. In today's session, we are going with the concept of issue of currency note. It is a function of Reserve Bank of India and also the role of Reserve Bank of India as a manager of foreign currency. How the Reserve Bank of India play a vital role in managing or management of forex in our country. And also we are going with the developmental role that is played by Reserve Bank of India in our country. These are the three topics we need to cover in today's session. Issue of currency note. So, as I explained in the previous session, it is a primary function of Reserve Bank of India. It's about issue of currency note in our country, right? It is a primary function of Reserve Bank of India to issue currency note. In our country, the issue of currency note is the initiative of Reserve Bank of India. Means, Reserve Bank of India is the only authorized body to issue the currency notes. Currency is the money present in circulation in the form of notes and coins. So, Indian currency means it's nothing but notes and coins. The currency does not depict the whole economy of our nation. Hence, it is going to showcase a part of economic earnings of our nation. It does not consider in the whole way. It is a part of economic earning of our nation. The most money present in our country these days can be found existing in a form of credit or electronic record, right? So whatever the payment and settlement it is going to happen nowadays, it is through online, right? So now the people had reduced using the physical cash. They started using e-currency. In 1926, the Royal Commission of Indian Currency and Finance was established. As I said, on the basis of this Royal Commission, the Reserve Bank of India had established. This Royal Commission is also known as Hilton Young Commission. This Royal Commission was formulated by the British officer. His name is Hilton Young. And also this act is popularly known as Hilton Young Commission. Okay, so this Royal Commission is also known as Hilton Young Commission because this Royal Commission is a contribution that is given by the British officer. His name is Hilton Young. The Reserve Bank of India had established under the same commission under the governance of Sir Osborne Smith. So, as I said, this Reserve Bank of India had established from the contribution that is given by Hilton Young Commission. The first governor of Reserve Bank of India is Sir Osborne Smith. He is the first British governor of Reserve Bank of India, right? But who is the first Indian governor? Sir C.D. Deshmukh is the first Indian governor of Reserve Bank of India, which is started as a private bank in 1st April 1935. So, in the beginning, this Reserve Bank of India was established by Britishers as a private sector bank. Okay, so later it get nationalized and completely undertaken by the government of India, right, in 1949. And in 1949, this Reserve Bank of India get nationalized under the Banking Regulation Act 1949 under the Ministry of Finance, and also it is undertaken by Government of India. I repeat, so at the beginning, this Reserve Bank of India had established as a private institution, private bank by the Britishers. And Sir Osborne Smith is the first governor of Reserve Bank of India, right? He is the first British governor. Okay. So, but Sir C.D. Deshmukh is the first Indian governor. But the current governor of Reserve Bank of India is Sir Shaktikant Das, right? So, after 1949, it get nationalized. The Reserve Bank get nationalized and completely undertaken by Government of India under the Ministry of Finance. Issue of currency note. So the Reserve Bank of India is the only authority to issue the currency note in our country, right? There are 4 printing press that is available in India in 4 different places or location. Number 1, Maharashtra. Number 2, Madhya Pradesh. Number 3, West Bengal. Number 4, that is Karnataka. It is located in MYSURU. So in 4 places that they are going to print the currency notes and coins. The Reserve Bank of India have also 31 regional office throughout our nation. Okay, so in 4 places the printing is going to happen, but the regional office is in 31 places in our nation. The currency note that they are going to print in the Reserve Bank of India is printed on the basis of minimum reserve system, right? So what is this minimum reserve system? That is introduced in 1957, right? So this minimum reserve system is, before manufacturing any denomination of note, it must keep the same worth of the note that is going to manufacture. Say for an example, it is going to manufacture 100 crore rupees at a time. Okay, it is going to manufacture 100 crore rupees at a time. Before printing 100 crore rupees worth of currency, it must keep the same worth of wealth in the form of forex or gold. Okay, so the Reserve Bank of India is supposed to keep the same worth of a foreign exchange or gold as a reserve, because to maintain a stability of rupee in the economy. According to the minimum reserve system, the Reserve Bank of India have the right to manufacture not more than 200 crores at a time. Okay, so at a time the Reserve Bank of India can manufacture 2000 crore rupees by keeping the gold and foreign exchange as a reserve. As I said, Reserve Bank of India can manufacture 200 crore of currency at a time, right? So while manufacturing 200 crores of currency, it is the obligation of Reserve Bank of India to keep a reserve of worth of 200 crore in a Reserve Bank of India. What it is going to keep? It is a asset. It may be gold or forex. Okay, so it is going to keep in a form of gold and forex. So there is a proportion for gold and forex. So it is going to keep 115 crore worth of gold as a reserve and 85 crore worth of foreign exchange as a reserve to maintain the stability of our economy. I repeat, it is very important point, dear students. Please note down this. Okay, Reserve Bank of India can manufacture 200 crore of Indian rupees at a time. Before manufacturing 200 crore of Indian rupees, it is the obligation of Reserve Bank of India under the Banking Regulation Act 1949 to keep the same worth of reserve asset in a Reserve Bank of India. It is going to keep 2 assets. Number 1, it is foreign exchange. Number 2, it's gold. Okay, so there is a proportion for the reserve gold worth of 115 crore and foreign exchange worth of 85 crore. Totally it becomes 200 crore in a reserve and 200 crore of currency will be manufactured. Why this kind of activity is done by Reserve Bank of India? According to minimum reserve system, if they won't maintain a minimum reserve in Reserve Bank of India, it may affect the economic status of our nation and it may lead for decline the value of rupees, right? So it should maintain a same worth of asset that had been printed in the form of notes. FEMA Act 1999. So in the earlier days when the FEMA Act was introduced, it was named as FERA, Foreign Exchange Management Act, and later it get renamed as FEMA Foreign Exchange Management Act. Okay, so the legislation of FEMA Act was passed in 1973 and this FEMA Act came to existence in 1999. Okay, so in 29 December 1999, this FEMA Act came to existence. This FEMA Act was established with the compatibility of the framework with World Trade Organization. It had established as a framework of World Trade Organization, and also it had covered the way of Money Laundering Act 2002, which came into effect on July 1st, 2005. Hence, it is a set of regulations that is going to empower Reserve Bank of India to pass the regulations and enables the government of India to pass rules regarding foreign exchange in terms of foreign trade policy of India. It is also going to look after the foreign trade policy of our nation. The objectives of FEMA Act. So the primary objective of FEMA Act is to facilitate external trade and payment. Okay, so this FEMA Act is going to focus on streamline foreign exchange transactions and also facilitate smoother trade and payment facilities, promoting the foreign investment. So this FEMA Act also promote the foreign investment like foreign direct investment and foreign portfolio investment, right? It is going to promote foreign direct investment and foreign portfolio investment to maintain the stability of Indian rupee. So this FEMA Act regulate the flow of foreign currency and it is going to beneficial to maintain a stability of Indian rupee, and also it must control the exchange rate with the coordination with Reserve Bank of India, monitoring and control of capital movements. This FEMA Act empowers Reserve Bank of India for the capital movements of Indian currency, prevent money laundering and illegal activity. It is the obligation of FEMA Act to deduct the unauthorized forex dealing in our country, harmonize with international standard. This FEMA Act globalize the Indian standard with international standard, that we call it as a harmonization, facilitating cross-border transaction. This FEMA Act also focus on cross-border or the global transactions. Role of Reserve Bank of India in forex reserves. Forex reserves are the assets that is managed by monetary authorities. So as I said before, manufacturing the currency note, it must keep the same worth of a asset as a stock. Okay, the Reserve Bank of India, to check the balance of payment in terms of a trade, and also it deals with the foreign exchange rate of currency and to maintain the financial market stability, right? It is going to deal with foreign exchange market. This foreign exchange reserve is governed by two acts. Number 1, Reserve Bank of India Act 1934. Number 2, Foreign Exchange Management Act 1999. Composition of Indian forex reserves can be broken into 4 categories, right? So the Indian forex reserve had been classified into 4 categories. Category number 1, foreign currency assets. So as I said before, manufacturing any denomination of note, it is going to keep as a reserve of foreign currency. Number 2, it's gold. The same worth of gold is kept in a stock. Special driven rights and reserve tranche position. So this is the various ways how they are going to keep as a proportion of asset before manufacturing a currency note. Role of Reserve Bank of India in forex reserve. Number 1, Reserve Bank of India act as a custodian in foreign reserve. It acts as a custodian in foreign exchange reserve and manage exchange. Dollar rupee rate. The Reserve Bank of India also stipulates the central government order by buying and selling the forex. Exchange control. It is the obligation of Reserve Bank of India to control the exchange value of Indian currency volatility. This Reserve Bank of India intervene on the basis of understanding with another bank to claim the value of dollar or foreign exchange. Developmental role of Reserve Bank of India. Development of financial system. It is a function of Reserve Bank of India to develop a financial system of our nation and also to maintain a stability of our currency by formulating monetary policy. Development of agriculture. So this agriculture is the backbone of our country because more than 60% of inhabitants of our country are engaged in agricultural activities. When agriculture is developed in our nation also get developed, right? To benefit the agricultural sectors, to develop the farmers, okay, the Reserve Bank of India is going to facilitate loan facility for Indian farmers by subsidy through commercial banks. Provision of industrial finance. Not only supporting agriculture sector, Reserve Bank of India also support the industrial sector, whether it is a small scale, middle or large scale industry, by facilitating the loan facility for the industrialists for their development and also for the development of our nation through commercial banks. provisions of trading. So this Reserve Bank of India also give the provision for the trade activities, import, export and interport activities. Collection of data. This Reserve Bank of India collect all the kinds of the data which is going to happen in our country in terms of the economic development, economic crisis, inflation, deflation, publication of report, and later the Reserve Bank of India it is going to publish the report, promotion of banking habit. So most of the citizens of India, they doesn't have bank account. So it is the obligation of Reserve Bank of India to promote banking habits in the minds of citizens. Promotion of export through refinance. Reserve Bank of India also promote the export activity by financing the people who is going to manufacture the product or a commodity in our country. Okay, so what happens if we import the commodity, it is our expenditure. If we export the commodity, it is our income. Our export leads for the higher income and development of our country. Okay, so whatever the developmental activities it is going to done by Reserve Bank of India, that is relevant for the economic development of our nation. Hence, it is going to promote the export activities by financing the manufacturers. It lead for the economic development of our nation. In the next session, we are going with the topic of the role of Reserve Bank of India as a regulator of payment and settlement system. It is a very important concept in the exam point of view, that is payment and settlement system. Products or types of payment and settlement system. So there are various kinds of payment and settlement system that is going to happen in our country. Okay, as per the syllabus, I had listed 5 payment and settlement system. Number 1, electronic clearing service. Number 2, NEFT, it is National Electronic Fund Transfer. Number 3, RTGS, real-time gross settlement. Number 4, IMS, immediate payment service. Number 4, UPI, it is Unified Payment Interface. These are the 5 topics we need to cover in next session. Thank you.